Hey, hope you're doing well today. It's a beautiful spring day, warmer weather. Hope most of you are getting to enjoy that. I wanted to come to you with an update on what's going on in the fund, some of our current deals that are already in the fund, some of the deals we've been working on to get into the fund. Wanted to update both investors who are already invested and some that are sitting on the sidelines waiting for the next deal. Um, and I haven't really been able to present those to you because we're in some kind of a stall. One deal that we are looking at had some PPM problems. I guess lawyers had to be let go, and new lawyers had to come in and fix some problems. That's a private equity deal that's a little bit different, no cash flow. We'll talk about that here in a second. We have another private equity deal that was initially cash flowing, but the structure of the fund of that deal is being changed, and it's being changed for good reasons. At first, we weren't sure about it, but now we feel good about that one. I want to kind of talk that through that one on the board a little bit, and then we'll talk about where we're going next, and hopefully that'll help you guys. Maybe I can keep this video to 10-15 minutes at most. So the first deal, um, it's a private equity deal. It is a software as a service. You'll see SaaS, software as a service. This deal came to us through some really unique connections. We did another deal last year that was a really popular deal in the fund. A lot of people went into that. It's a private equity deal that we're hoping will actually make a huge impact on the alternatives industry. Through that deal, we came upon another deal, and it is a software as a service deal, a consulting in the, let's say, the risk management space. That's an opportunity that you probably won't see very often, won't see it out there. Nothing like some of the real estate deals we're doing. The cool thing about this is I think it has an 8x opportunity, but no cash flow. So who is that for? That might be for somebody who has some money set to the side that they want to take some, I call them home run swings with it, but you don't expect cash flow. And I think this could be a 3 to 5 year hold, okay? So everybody wants their money back sooner, but this could sell in 3 to 5 years. They have specific revenue targets they're wanting to hit. And when you say software as a service, some people think of, oh, that's like having Netflix and getting charged $15 a month or whatever Netflix. Yes, but this industry is not being charged $15 a month, but being charged like $150,000 a month. Yes, believe it or not, it's hard to put your mind around that, but this company, it does consulting, and the initial fee might be $1 million and the ongoing might be $500,000 a month. So huge cash flow opportunity with this. This has an NDA. If you want to hear more about this, respond to this, either this email or wherever you see this video. Get in touch with me and we'll get you an NDA so that I can talk more candidly about this deal. Again, no cash flow, 8x. The next one, I can talk about this all day long. It's called the PAVE. And the PAVE is something we've been involved with since last fall. The PAVE is simply a bunch of guys that have decided to go out. They're in the Midwest. I think it's not the Midwest, but the Southwest, Arizona, West Texas. And they're simply buying up mom and pop paving companies. Now, these guys have already bought 2 paving companies with a third under contract. Everything's going great. They paid their first distribution last month, or a couple weeks ago, actually. So everything is rolling right along. The PAVE is so popular that it garnered interest from a Wall Street private equity fund. This private equity fund has bought other businesses in their beginning stages, other things like the PAVE, and they throw money in after it and help magnify what they're doing. So what has happened is the PAVE has attracted a $150 million private equity firm that wants to come in and partner with them. The whole structure's changing. It's going to a 90-10 split, and the PAVE sponsors have told this private equity group, hey, we've got some investors that are already in this. We need to take care of them. And they're like, sure, we're okay with that, but we have some rules too. This deal will no longer cash flow either. So we've probably received our last distribution from the PAVE, but it will become a very similar deal to this one up here. I think the X is 7 to 8X as well. And We don't know exit, but I would say it's another 5-year hold. Now these are not. It's odd to have two deals that are so similar that are both private equity, but that's what we have with these two deals. Okay, they're available right now. I don't have all the paperwork together, but if you have interest in either of these, get with me. We're going to make an investment probably later in the spring, and then we'll move on from these. The PAVE will be closing because this private equity group says, hey, we're going to let you close out this first round, and then they're going to go after bigger. So mom and pop companies have been their target, little $3 to $5 million in revenue paving companies. Now they're going to raise their target to $10-15 million companies. Now they can go buy 8 to 10 of those larger companies, a little bit more scale there. Their goal is to accumulate $100 million of earnings and EBITDA, which is what you talk about in the business world, and then they take it and they sell it at 8, 9, 10x EBITDA, and that becomes an $800 million sale. That's where you get these multiples that are so big. So wanted you to see that, because if you're at all interested in that, let's talk. There's nothing else concrete I'm looking right now. We've got to find some debt funds, and I'm vetting with some other fund managers. We're looking at debt funds. There are debt funds out there that go 8 to 10% all day long. So what is a debt fund? Let's say, flipping houses. There are so many hard money lenders that loan money to house flippers, and they loan it to them at 10, 12% interest. They get some points. A point is just a percentage, 1 or 2 percentages of the loan. That's how they make their money. These debt funds are always looking for investment. They go into the commercial space, and we're looking at some of the bigger ones. I'm looking at a big debt fund that makes commercial kind of hard money loans. These loans are like $500,000, $1 million, $2 million, and they can pay. I'm looking for a debt fund for us that pays somewhere. I want to find a 12 to 15% debt fund. And because some of our deals don't have cash flow, we want to go find something that does. So we want to marry deals that don't have cash flow with deals that do. That way we're turning money over a little bit faster, and that way you can reinvest and keep those funds flowing. So we're looking at debt funds right now. I'm almost positive I'll have something soon, I promise. But it's just been a slow spring. People are a little bit on edge about the stock market. If you've got money in the market, there's still some time. I would suggest that you move some of that out. We don't know what tariffs are going to do to the market, but the consensus is that Wall Street money is going to suffer, that some pain has to be suffered before we can get past that. So I'm not want to get political here, but I think that we do. For the longest time, we have kicked the can down the road economically. We've offshored so many jobs. We've got to do something to get these core jobs back on shore. And yes, we may be paying higher prices, but in the long run, I think that medicine, once it's swallowed, will bring better health for our economy. So just wanted to update you on these. Hopefully I've kept this video pretty short, under 10 minutes. The SmartFlex Fund is still moving. We've just slowed down a little bit. We're looking very carefully at deals that cash flow. We're looking at real estate deals still. They're out there. We're just being very careful. Our self-storage deal paid its first distribution. Really, really good. And we're waiting on the marina deal to pay its first distribution. Those are great deals that we've done. We will revisit those asset classes. We're looking at mobile home park and self-storage deals. Those are really nice cash flowing opportunities as well, and equity growth. I promise you we'll bring some of that into the fund this year. We're just being very careful, and that's why I do this. It's my money and your money, and I want to make sure my money is placed in investments that are vetted, that sponsors that I trust and know, and that I can go out and find out about them from other people. And that's why I created the SmartFlex Fund. If you don't know much about that, schedule a call with me. Let's get on a call for 30 minutes and just discuss what I do, how I help investors, previous business owners get into alternatives like I have. And like I say, if you've got money in the stock market, it's a great time to get some of it out. That's just my opinion. But I love alternatives. I love real tangible assets, businesses that cash flow. I love physical real estate. And there's no better time If you're a little bit hesitant about getting into these tangible assets, the Smart Flex Fund is the perfect way for you to dip your toe in and start to diversify across 8, 10 to 12 different asset classes. So again, if you don't know much about the Smart Flex Fund, reach out to me. Let's get on a phone call and we can see if this is a good fit for you. Hope you guys have a great day.